Starting. All attendees are in listen-only mode.
Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen, and we'll start shortly. Let's get Discord guys up and running. Bill, good morning. Fred, Bill, Richard, welcome. Sorry about yesterday closing bell. We had some technical issues with the GoToWebinar API. I apologize for that. Looks like it's resolved. A lot more people today than we had yesterday, the closing bell. So hopefully we will not have that issue tomorrow. Everybody on YouTube, welcome. Please hit the like button and subscribe. Today is Wednesday, so here, YouTube guys. We're broadcasting live. 5 people are watching. All right, that's good. We're definitely have some traction. You know, as many as 82 people watching. So that's good. That's good. So if you haven't subscribed yet and you're watching the video, please hit subscribe button. That would be greatly appreciated. We do have live broadcasts today and closing bell, and then Friday at 9:30 a.m. Central as well. Alon, thank you. Perfect. Alon, how's it going? All right. All right, Discord is up and running. Yay. YouTube is up and running. GoToWebinar is up and running. We are everywhere. That's good. Okay, I guess let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Welcome, Discord users. Yellowtown is here. All right. My brief bio is Executive Vice President, Head of Technology at Options Express. Started trading for the past over 20 years now, mentoring, teaching subscribers how to trade stock and options. My core background is technology, right? I have a master's degree in computer science. I love, machine learning, artificial intelligence, applying to financial markets. That's kind of my core expertise, and been managing my own money for over 20 years using the technology. So want to take this opportunity to say thank you to all the subscribers, whether you're on Discord, YouTube, or go to webinar. Really appreciate your time. I love teaching. Very thankful that you guys take time out of your schedule to join. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest. Please consult your financial advisor prior to making any trading decisions. If you're new to trading stock and options, I encourage you to visit optionstrading.com to understand the risk associated with trading stock and options. All right. Again, let's just reiterate trading psychology. A lot of uncertainty in the market, right? A week ago, it was all about soft landing, and the market continued to rally. Yesterday, it's all about contraction in manufacturing data. We're about to release services PMI, right? A lot of indicators are sitting on the edge. Whether it's a 10-year yield, I would pay attention. Whether it's gold and silver, I would pay attention to that. Small cap, regional banks, technology stocks, they're all sitting on the major key support and resistance. We're kind of on a make or break point. So it's very important to have a specific trading plan and follow the trading plan, right? So the first step is dichotomy of control, i.e. process versus outcome, right? That you can only control things within your control. What is within our control? Cash. I propose that if you're still in soft landing, 30% on the cash. If you're in hard landing, I am in hard landing. I have 50% of my portfolio in cash, especially when money market funds paying 5%. Right, we'll talk about money market funds. That's been Wall Street headline, right? Record trillions of dollars floating into money markets, into money market fund. Close to $2 trillion floating every day into a reverse repo. Pretty historical times in terms of magnitude of these transactions. And so if you're in hard landing, 50% cash. Cash is the king. It pays you, 4.8% in money market fund. So that's not a problem. And that's number one. The second one is the risk management, right? Risk management, avoiding fight or flight response, right? You want to keep your blood pressure 80 over 120, 120 over 80, right? Your adrenaline level should be low when you trade. How do you achieve that? We're all humans. We all react. The only way I can find out to achieve this, well, meditation, right? Doing push-ups before before trading session starts. Breathing exercises, right? Meditation is very helpful. But the most helpful is number of positions and position size, right? Usually my blood pressure goes up when I either made a mistake, right? Then follow carefully in terms of how many positions I have, or position size, right? I think market is going to be in hard landing, and all of a sudden technology rallies, 20% from its bottom in a very short period of time, in a matter of 4 to 5 weeks. So to avoid the blood pressure going up, what do? You have to make sure that you're bearish and the market rallies 20%, that your drawdown, you have 4 positions, right? Let's say 4 bearish positions, and you don't have more than 2.5% exposure per position, right? 4 positions, 2.5% account value. Same thing right now. a lot of people, most people are bullish, right? If the market pulls back 10, 20%, and if and when it happens, it's going to happen very quickly, right? I think it will happen, and probably sooner than everybody anticipates. So then, if you're bullish, you want to make sure, one way to offset this, again, you have 4 positions, 2.5% of maximum risk per position. How do you achieve that? I would encourage you to keep a journal, right? Very important to keep a journal. Let's go over yesterday's trade and just let's review it. So I bought UNH, right? Short-term UNH and silver. Let's just go over both of these trades. UNH, right? So I'm bullish short-term. I'm bullish on healthcare, bullish. Well, we'll see what the services PMI is, right? That's kind of, I think right now we're in make or break scenario, right? It's going to get announced in 8:45, so in 20 minutes, right? In 20 minutes, we will know if, sorry, Tuesday, we're on Wednesday, 8:45. Services PMI, 9:45 and 10 a.m. So in the next 20 minutes, data from Europe, Eurozone services PMI came in line with expectations. So France, Germany, people are traveling. I just came back from France from the skiing vacation. I mean, it's packed. It's packed. Everybody's traveling. Everybody's spending money. So life is good, right? Unemployment is low. Europe avoiding recession is able to potentially avoid recession. United States potentially able to avoid recession. So the theme is everybody's spending money. And that's good. We're a service-based economy. Manufacturing is not as important anymore. So if the data comes in line with the expectation, good data, we're back into recessionary theme, right? Good data, market will go higher. Bad data, like yesterday, factory orders, if it's worse than expected, market will sell off, right? So let's assume services PMI comes in line with the expectation, right? So I still think that UNH can have more room to the upside, right? It kind of reached almost July lows, extremely oversold. UNH, we have a signal on aggressive power trader on yellow tunnel or active trader, very similar models, often very similar list. So yesterday was UNH, right? Today we have Costco, General Electric, ExxonMobil. Speaking of General Electric, we talked about very often comes on the list. So I'm still in this trade. How do I decide? 2.5% stop loss, right? So I bought it at 493. It's actually trading at 498. Let me look at my. So I have an order to trim position at 503, right? So I'm looking for a move of about actually 1.5%. So maybe I can shrink half of the position and leave the half. So how do I decide the stop? So let's say on a short-term trade, if I keep it one day, I think 1% is enough. So I can, maybe even sell maybe half of the at 1% gain at 500 and maybe half at 1.5, 503. What is my stop loss? My stop loss is 484. Right, right below this line. Yes, 2 days session low, the breakout. Right, if we're gonna break below 483, then most likely the stock is gonna try to close the gap. Right, if I'm short-term trader, right, short-term trader, a couple days, maybe a week or so. If I'm thinking about a couple weeks, then my stop loss is definitely, March lows, right, 52-week low. If we break through 52-week lows, then something's wrong with UNH. So let me actually try to do that. Let's try to close half of that order. So I'm going to sell half. Okay, let's do 499, right? 490. What is this trading? 499.10. So how do I determine? So stop loss short-term trader would be here, right? And longer term would be here, right? So now I document this in my trading plan, right? I document it in my journal, right? In my journal, my trading plan is if I can capture 1%, 1.5% in a short period of time, 0.5%, usually I'm out of the trade. How much money am I willing to risk? So now let's see. Sorry, I'm gonna jump in. So I'm gonna close half at 499.10, right? Capture 0.5%, right? About $4. And then I'm gonna try to close the other half back at 503. Maybe 1.5, 504, 1.5. So yesterday I bought it at 495. What is my stop loss, right? What is my stop loss? My stop loss is below this level. So 45, so it's about 15 points. Is my stop loss, right? Obviously, if it drops below this level, I'm out, right? I mean, you can maybe zoom in and look at the 1 hour chart, right? If you want to be kind of a day trading, right? I would use this level, right? If you really want a short price fluctuation, but this is very, not a very strong support, not a very strong support. So I favor 484. So 498, I bought yesterday at 495, right? 484, it's about 10 points, 15 points, 10 points. So if it's 15 points, the point is that if I have $10,000 account, I do not want to risk more than 2.5% of my portfolio per position, right? So that would be $250, okay? So $250, and the question, how many shares can I buy if I'm risking 15 points, right, or 10 points? So 15 points, $250, that's roughly 15 shares, right? So 15 shares. And then I know that in 10 minutes, we're going to have a services PMI, right? And if it's worse than expected, then healthcare will probably pull back. So then my thought process, maybe I buy, 7 shares at 495, right? I bought 7 shares here. And then if it does drop to 484 and I'm still kind of bullish on healthcare, then I would buy another 8 shares, right? At 4, as it approaches closer to 484. As it approaches closer to 484, I can always go to Stock Forecast Toolbox. And just look for my support and resistance. On spiders, it sees 408 is the support. 414 is overhead resistance, still very bullish trend. Short term for the next 10 days, bulls are in control, right? We had a strong rally, a little pullback yesterday. It's all about services PMI. If you look at UNH, vector is turning positive, and for now, 496, 485 support. So model basically tells you, listen, if we drop below 485 before that gap, you probably 485 below this gap, then something doesn't make sense in UNH, right? Something doesn't make sense. So that's how you determine the stop loss, right? Some people use this for longer than, they say, Vlad, what's 1% or 0.5% doesn't change my, livelihood. Okay, then you have to hold the position longer probably, right? So then your stop level is 460, right? We have positioned that, if you want to hold UNH for a couple of weeks because you think it can go here, then your stop loss this here. So same idea. You still don't want to risk more than $250, but now the stop loss, let's say you enter it now, you think we're going to break through this level. So, it's a $40, right? It's a $40 stop loss, right? 40 points, 40 points. 40 points, you're still risking $250, then it's only 6, you can buy 6 shares. That's because you're either looking 40 points to the upside or 40, maybe you're looking for 40 points to the upside, 40 points to the downside. So this is the most important calculation. Risk management is very important. I would document that thought process in a journal, right? And basically say, break the trade into 2 parts. Decide when you're going to close one, when you're going to close the second one. And in terms of portfolio position, if you're in a soft landing camp, maybe you have 3 bullish positions like UNH, right? One is UNH, maybe one is silver, right? And you have 1 bearish position, even though silver, I think, is silver is a bearish. Some people might not agree, but fine. So you have 3 bullish and 1 bearish position, right? Bearish position could be SH, right? Inverse ETF, you have same process. It's just you decide if you're in soft landing camp, maybe you have 3 bullish, 1 bearish position. If you're in hard landing camp, then the other way around, you have 3 bearish, 1 bullish. And if you're like, nobody knows, you can't really tell me what's going to happen. So you market neutral, right? You have 2 bullish, 2 bearish, because you think market is just going to trade sideways or not go anywhere. So that would be the process, right? That is the most important process in trading. So 4 positions, 2.5% of account value per position as the maximum risk. Okay. So I trimmed half of the position 499 and put in the other half at 504. If I want to keep longer position, maybe I keep smaller amount, and want to wait for UNH as UNH is going to announce earnings. If you think healthcare is doing well, maybe you keep small percentage of your position beyond earnings with the anticipation that UNH is very volatile during earnings. It can go up 5%, it can go down 5%. So that would be a strategy. But present sold for 99.46. What about the ruler? Never let a winner turn into a loser. Just buy again lower. It all depends on your conviction, right, Clayton? What about rule never let a winner turn into a loser? Yes. So I believe in dollar cost average. To me, this turn the winner. You trim your position. Do I want to close at 504? Yes, but I know in the next 5 minutes market is going to be very volatile, right? I know that. 10-year yield, right? It's all about yield. It's sitting on the edge, right? And bulls should be extremely nervous because this is going back to December lows. It's going back to June of last year. If yield breaks through this level, bulls might say that this is bullish, right? But I think majority of the people will disagree with that assessment. This would be a recession trade, right? If we break through this level, then it's a recession trade. We kind of ended yesterday morning. I said, well, TLT is up and QQQ is up. That doesn't make sense, right? Because that's an inflation trade, right? That's an inflation trade of last year, right? Inflation trade. Now we are trading, there is new theme, recession, right? People argue about that, right? Like you turn on Bloomberg, CNBC, you're still gonna have multiple opinions. At least my opinion, last year, it was all about Fed and how far they're gonna raise interest rates. And since we have this, financial, you can call it crisis, instability, I don't wanna offend anyone, let's call it instability, financial liquidity issues, maybe even better, instability, liquidity issue. Now, more and more people believe in the recession trade. What is recession trade? When you have a good macroeconomic data, good data means good for the stock market, bad data means bad for the market, right? Not in the reverse, right? Last year it was the opposite, right? Bad data means Fed is going to lower interest rates, so market rallied. But good data means Fed is going to tighten longer, and that's bad. I think that trade is over, right? That trade is over. We're now in a new kind of theme, a recessionary trade. So we're sitting on the edge and everybody's waiting, right? So after the announcement, expect volatility. We're either going to go this way or this way, right? This is going to be back inflationary trade, right? If it's better than expected, people are going to say, well, Fed is still going to stay longer because services PMI is higher than expected. Inflation is longer, but rates are going to go up and most likely QQQ is going to reverse. But if the opposite, if services, the data comes worse than expected, which I don't expect it, but if it does, then yield continue to drop and market is going to pull back. Interesting article in Wall Street Journal on repo. So let's see if we can pull that up. Everybody's kind of hunting for the, where is the next problem going to be, right? Jamie Dimon yesterday said that, this instability, liquidity issue is not over. So every day there are articles about where can it be, what's the next. So I like that. Where's that thing? So I like this article, deposits outflow shine light on Fed program that pays money market fund, right? The idea, and you can see this huge $2 trillion of overnight reverse repurchasing program at Federal Reserve, right? $2 trillion. Every day gets swept. And the article basically explains how money market fund, right? It's very good. I mean, I'm still not an expert in this. There's not interesting observation, right? 2008 crisis was also kind of where you have money market fund would pay you. I actually remember that, where money market would pay you 3.5%, 4.5%. It reached some peak, and then it collapsed. Obviously, after Lehman moment, because the only way to incentivize people not to keep money in the money market fund is to drop rates. So you can drop rates because inflation is not beyond control. But I mean, it doesn't have to be this way, but that's what the article implies. But more importantly is how the reverse repo works, right? Was this idea of Fed sells securities such as treasuries to firm with an agreement to repurchase them later at a higher price, right? And every day, the money are flowing, right? Fed gives securities to the firm. Fed sells securities, gets cash, or firm takes security, gives the Fed, and that delta is what holding the cash overnight is what allows us to get money market fund currently 4.9%. So interesting article, but the author implies that there could also be instability. I remember in 2008 your principal should be at $1 in theory. But if there is instability or lack of liquidity, we've had these sparks in the past 12 years, then sometimes it's not $1, right? Money market, you can lose your principal in theory. In practice, it never happened because Fed steps in and starts printing a lot of money and just gives, sends it to banks. But that's what the article is basically saying, that the money are floating. There is a record outflow from the cash out of the banks into these money market funds, right? Which is an issue right now. And the article is trying to figure out, how do you deal with this? And basically concludes the only way one of the ways, the main events, to lower interest rate. Which is why you can kind of actually see, sitting on the edge. All right. Let's see. Let's see if the data came in. US global service people for March 52.6, estimated 53.8, so 52.6. 52.6. I mean, that's close enough. We'll see how the market reacts. So far, 10-year is not moving. 2-year, I guess, is moving. Let's shift it to 5 minutes. Guess not moving enough. So everybody's waiting now, I assume, for there's a different service to ISM services. I guess it's more important, or to confirm the data. Okay. And Spiders is sitting also, right? So the 10-year yield sitting on the key support, and Spiders is sitting on the key short-term support, right? Which is March 6th high, right? That's the breakout, March 6th. So everybody's waiting and sitting on the edge. For now, no movement. I would pay attention to IWM. It continues to make new lows, and KRE, and continues to make new lows. Okay. Yeah, stocks open lower after report from growth. Okay, and that's okay. So we'll just wait and see. Okay. So that's the topic. Again, the services PMI, global services PMI, came in line or better than expected from France, Britain, Germany. And I guess we're still waiting for United States for the second piece of data. Any questions? Buyback on pullback. Fred, I'm going to trade around UNH, right? So I closed maybe, I'm going to, just break it down into pieces. Maybe half of the trade, I'm going to do short-term trade. The other half long-term. I still think healthcare has more room to the upside, maybe continue to buy, right? And yesterday I also bought a silver, right? You have a start, but I closed it, but waited for a pullback. I think pullback is still coming, but I think it's going to be a lot shallower, right? because silver had on a large volume vertical move to the upside. And I don't know if it's a clean breakout, but I would be a buyer and pullback on silver, right? Maybe if it does, does something like this, maybe even 0.5%. I still think the passive list resistance is going higher, right? So I would be a buyer into these pullbacks on silver as well. So I think silver, precious metals, healthcare is one way to play that. All right, what's the next? 10 a.m. So, okay, we have 8 more minutes. Any other questions? So money market fund is tied to not treasury rate, it's tied to the money market, to the Fed rate, right? The Fed rate, and Fed rate is, what did they say, 4.9%. So the Fed interest rates on reserve is currently at 4.9%, the Fed target rate. PMI 52.3. Fred, thank you. Okay. In terms of other developments, let's see. Talked about spiders. We talked about. So small cap, right? We have pretty big pullback in small cap. That's bearish. Right, so value across the value campaign, right? Home builders, pretty strong pullback, right? We have metals and miners, copper, strong pullback, materials, strong pullback yesterday, industrial, transportation, significant pullback, and industrials, right? So this whole concept of soft landing, right? Last December, you turn on the news and everybody said, forget the technology. Just continue to buy blue chip stocks, right? Caterpillar, JP Morgan. That trade didn't work out well because nobody anticipated sharp pullback in rates, and money floating from growth, from value into growth, right? So everybody's abandoning the value trade, and everybody's piling into growth, right? And I'm not in that camp. I think this is just a short-term divergence, right? Semiconductors are overbought, right? And it's just a matter of time to pull back. We already have, significant, reversal, and I think there'll be a follow-through. So I think it's a typical, kind of a top building process, right? We talked about top building, right? And it could take time, right? In August, in June, it could be a couple of weeks, right? It could be months, right? It could be months, right? This looks like a very long top building process, right? We're basically not going anywhere since January 31st, right? So for the past 2 months, you're kind of stuck in this range. So the question is, how long will it continue on, and where is the breakout? Is the break continuation, or is the break to the downside, right? I personally think the break is to the downside. When? Well, the earnings season starts next week, right? So and banks are first, right? Large cap regional banks, global regional banks are going to come out, and may or may not be the trigger for this pullback, but we'll see. Okay, any questions? Peter, is XLE is a good buy? I don't think so, right? I don't think so. Again, very strong pullback. We do have this recovery on OPEC, but it's all about supply and demand. Yes, they decrease the supply. OPEC is notorious for not following through, but even if they follow through and they do decrease by 1 million barrels a day, it's all about demand, right? And if the manufacturing data is going down across the globe, then if manufacturing data is going down across the globe, then demand for oil is going to decrease. So the way I think about it is oil. Are we hitting? In terms of oil, are we going to hit 95 or are we going to hit 65, right? Which event is going to be first, right? Is this event going to be first or this event is going to be first, right? I personally believe it's this one. So I would not chase it. Can it go higher a little bit more as earnings season unfolds? Very popular trade. You turn on Bloomberg CNBC. That is very popular trade. It was very popular trade here. Everybody thought it's going to go high, but you can see that it's volatile, right? It can drop 20 to 30%. So I still think it's a pattern of lower highs, lower lows. So I would be a seller into the rallies. But it could recover, right? It could get to 92, right? That's fine, but little room to the upside, but pretty large room to the downside, right? So I think this event is going to happen first. Any other questions? Peter, thank you. Any other questions? All right, 2 more minutes. Let's see, anything happening with the rates? Probably not, right? I guess everybody's waiting. Okay. In terms of, so we talked about rates, we talked about repo. What else? We talked about inflation, right? Data from Europe. Still, inflation is higher than everybody wants it, especially because of the services data. So the Fed is on track to raise the interest rate, right? We're going to continue raising interest rates, whether it's in Europe or United States. So there's a huge disconnect, right, from the 2-year yield at 3.7 versus money market fund that pays you 4.8, right? Big discrepancy. And Bear's take on that is that Fed is not lowering interest rates based on the current data, but as the data gets worse, they will be forced to lower interest rates by end of the year. And that's why bond market was anticipation of that event. Bonds, people are buying bonds, right? And yield is going down. And that has been the theme, right? We talked about inflation and we talked about repo. Okay, so let's talk about the rest of the positions. Let's just review them. So NOC, right? I'm still long NOC. I did trim the position. Right, so it looks like data came in. Looks like, at least initially, it's negative surprise. Let's see. Probably needs to give it some time to fluctuate. Okay, 51.2 expected 54. So pretty big drop, right? Pretty big drop in data. Still in expansion, right? 51 is not 49, but expectation was 50. Expectation was 50. Where am I? 54.3, and it came in as 51.2. So still an expansion, but a lot worse than expected. And we're breaking through 3.3 and 10-year yield, right? So I would watch this price action, right? 5 minutes doesn't set the trend, right? People need to digest this data, right? Take it apart a little bit. But if we close below 330, you can see for now no effect on technology and spiders. But if we close below 3.3, then we probably have seen the highs for this year, right? Or for at least long period of time, right? If we close above, then there's still kind of, right, we still can reach February highs and this uptrend, right? We talked about this uptrend, right? So we could, this is scenario number 1, which I actually favored, right? I favored this scenario, that service, because I was under impression the services data is going to come in line with expectation. It came in worse. Scenario number 2, we start, rapid faster deceleration, and I guess originally, even end of April, right? So the question is it end of April going to happen, or is it going to happen end of May? So that's the question. But that's scenario number 2, which is at this point, we'll just have to keep an eye on these rates, right? Again, large movements, 3%. That's, again, if you believe that we are in recession trade, that's the confirmation that market is going to be under pressure and continues to decelerate. So I might actually, so let's look. So in terms of QQQ, one way to hedge, so June might not be enough, right? We talked about June. I do have a bearish call spread. I do have June put, right? 250 put, and September 290 to 70 put. So I might just add June put in QQQ, but in September, right? Go out into September. June might not be enough time, but September, I think, more or less just see how much, until volatility is still kind of low. So let's see. Kind of maybe get a little bit more bearish to 80 put. Buy to open to 80 put at 781. Kind of buy a little bit more insurance, and again, VIX is still low, right? Surprisingly low, so it makes sense to okay. So it makes sense to get into September to 80 put, right? I'm risking $700, but if I'm right, QQQ, value already started selling off, then technology is following the suit. So by September, I think we'll be, way below 260 by September. So if that's true, it's a big risk versus reward. Right? I'm risking $7, but potentially, I can make 280 to even 250, $30, $40. This is one of those trades where, 1 to 3, 1 to 4 times in terms of risk versus reward. But, you just want to be very careful, right? I did the same trade, in December. It didn't work out that well, right? Because we had, I thought by March we will break, at least retest the lows, right? And I was wrong, right? Because the earnings were better than expected. We didn't have any financial liquidity issues. And inflation subsided, so we have this multi-months rally, right? Not multi-months, yeah, in 4 months rally in technology, right? This time, it could be the same thing where, I'm wrong and, earnings are going to be better than expected. So it's all about size and number of positions, right? You don't want to take half of your portfolio and start buying QQQ puts, right? You have 4 positions. Those are your choices, right? Break it apart into multiple entry points. When you trade options, it's different strikes, different expiration. I tried June. Now I'm not sure if June is going to work out. Okay, I'm going to try, maybe do another contract for September. Any questions? All right, Discord, thank you for being here. YouTube, how's the YouTube doing? All right, people are watching. So, looks like technology is now following the bond market. So it's pulling back, right? Technology is pulling back. Let's switch to 1 hour. Spiders is approaching the key support, right, at 407. Hasn't broke through this level yet. So that's good. Semis kind of took a bigger hit. They're just vulnerable because they're overbought. So semis already started the descent to the downside. Dollar is a little bit stronger. People still hiding in gold and silver. Consumer staples is doing okay, and I think even healthcare, right? So kind of typical flight to safety. People are still hiding in UNH, and not a lot of Amazon down, KRE. So I would watch KRE, right? Kind of retesting the lows. Amazon started pullback, ARK started, so risk off, right? Kind of risk off for now. Surprisingly, Bings are okay and stable. Let's see, how's the industrials? Okay, down 60 basis points. Very low volatility, right? So this is where you buy puts and calls, right? Because VIX is still low. That's about it. Okay. So I added to QQQ position. So April, I'm still bullish, right? 310, 315. Where's QQQ? Still out of the money. We are approaching support, right? 312 support. We do have CPI data next week, right? That could reverse this trend. But I would be a seller into these rallies, and I would just watch the 10-year yield. That does not look good. And same thing with 2-year yield. It's retesting March lows. I mean, year-to-date lows. Any questions? 51.2 UMH 49.3 out of 50. John, nice trade. FRX, very nice, John. Good job. Irene, STZ, I'm gonna do it in my personal account. I actually have a person. I am a seller of calls. The reason I'm not doing it in Tradespoon or Yellow Tunnel, because one contract is $20,000. An average account is $10,000. You can really repair it. But if you have a larger account, $25,000, $50,000 account, fine. You can. I'm a seller. It's estimated move is around 6%. So I am a seller of calls, maybe even puts. Right. This is consumer staples. Consumer staples has been holding on. Right. It's positive. Right. The flight to safety. Everything is in red, but consumer staples and UNH is, people are still staying in the name. Peter, when would I take profit? Are we talking about this QQQ trade? This is kind of my, I don't like to trade single options, right? Because single options, you make a claim that you can time the market, right? And usually that doesn't work, right? I did the same trade in December, didn't work. So it has to be rare, and it has to be when you have high conviction on direction, right? So I have a high conviction on direction that it's down. Don't have a very high conviction on the time, but I think by September, it's going to give us this earnings cycle, next earnings cycle, we already see signs of distress. That put, I'll probably wait for 52-week low, right? Once it reaches December, I would close that. And if I see breakdown, then I would maybe reopen it. But that's kind of my goal. I'm waiting for QQQ for 260. So I have between now and September for QQQ to reach 260. So that's when you do puts and calls, right? If you're not sure, then you do a spread, right? So I do have most of my positions are spreads because I think market goes up and down, up and down. But if I do have this sometimes strong conviction that we're going to reach the lows prior to September, okay, then I'm going to hold it until it reaches that level. John, today is Wednesday. Scott will do the closing bell. Scott will do the closing bell. Starts working. Peter, the way I make decisions on these trades, I look at my portfolio composition, right? So right now, let's say QQQ is down 1%. My portfolio is up 1%. I'm fine, right? I would probably hold the QQQ put. At some point, if market going to continue goes down, when QQQ is going to be down 1%, my portfolio is going to be up 2%. Once I get to the correlation of 2, beta 2 in my overall portfolio, I'm going to start closing these puts, right? Either puts or put spreads. But I'm going to close it, right? Because I don't want my portfolio to trade 1 to 2, and I know that market doesn't trade one way, right? Market is not going to drop just in one line, right? It never does. So it's going to be it's going to be one of those up and down actions. So I'm watching my portfolio delta and I'm watching my portfolio beta, right? Those are very important metrics. So right now QQQ is down 1%. I'm down. I'm up 1%. I'm fine. I don't need to aggressively close bearish positions. I think, especially if I'm going to monitor this for a couple of days. Right. The longer we stay below these levels, that's not good. Right. That's not good because there's no support in yield below that. One day doesn't set the trend. Right. We've seen these false breakouts. This is in my journal. I always, or my plan, wait for 2 to 3 days to confirm the trend change, right? If you think 10-year yield broke the lows, probably not, right? You probably want to wait, tomorrow and Friday. Friday we're still below 3.2, then the 3.3, then the market is in trouble. Credit call spread for time decay, Fred? Sure. I have that already, so I don't want to do it again. If you don't have it, then it's fine. But I do have 280 to 90 call spread in June. Right, that's actually in the money. If you didn't do this, you can do it out of the money. Again, I encourage you to consider looking at your beta. Right, if the market is down 1% today, and your portfolio is up 3% or 4%, you're probably overly bearish. Right, you think that this is the market has peaked, but it doesn't have to be, right? If market after the CPI data next week, if QQQ is at 330, don't be surprised, right? Because I think that's the core scenario. But I think there's limited upside, right? Market might go up 10 points, maybe even 20 points. But if I think it's going to drop 60 points, then risk versus reward makes sense. So keep an eye on your beta. Peter, thank you. When can it be assured market will not reach August high? So the question is, when can you be sure that we will not reach this level? Right now, it's too early to tell. This is the previous high. I would say QQQ has to drop below this level. If we have a follow through next week and we are here, then this is the top. If we hold this level, if we hold the February high or September high, if we hold these levels, then on CPI data it could be this, right? If we break below this level, I would say that's the confirmation that this is the top, and probably for the next few months, not for the next few quarters, the top. So nobody knows where the top, right? But clearly, based on industrials and the value stocks, the top is near. The top is near, right? We're building the top, and you can see that value is actually turning positive. So it's not a indiscriminate sell-off, even though the yield is dropping. Value is staying positive, and one of the explanations because it's already got beat up significantly, so people are not selling. And another sign that this is a top building process, right? This is a top building process. It's not a one way. It doesn't last 1 or 2 days. It could last longer, right? It could last longer, right? Just like here we had it for maybe 2 weeks. I would not be surprised that this is happens for next 2 weeks. You have CPI data, earnings data, a lot of things can happen. But very good question, right? So definition of top building, that it takes time. 1 day doesn't set the trend, 2 days doesn't set the trend. To call a top in this strong rally, right? We have kind of think of it as 3, 4, 5, right? We're trading in 5, wave 5, Elliott waves. Where does it end? We don't know, right? But usually in the Elliott waves, if it drops by more than 50%, then it would, then this would be over. Do you have a point at which you consider breaking a spread? So if I'm bearish, again, I would be a seller into the rallies, right? So if we do reach 330, I would consider breaking the spread, right? Right now, it's just too early to tell, right? But, I think 330 is the top. And I still think we can hit that based on CPI data and the earnings. We may or may not, right? I mean, this is going to dictate if we will or will not, right? Because the yield is very important. So it's making new lows. If Friday we're still below 320, or Monday we open on Monday we're below 3.3, then I think we're not going to get to 330. Very unlikely. When is CPI data? So CPI is Wednesday. I just don't know how important the core CPI is. I mean, it could be higher, it could be lower. I don't think it does matter. People are going to pay attention because this is kind of this is inflation theme, and I think inflation is now in the back seat. So I don't know how much effect it's going to have. I mean, if it's a large move to the upside, it might. If it's a large move to the downside, probably not. But maybe a large move to the upside, big surprise, maybe that will happen. Get somebody's attention. But other than that, I don't think it's an event. So I think most important is the yield right now. And, if it's going to continue breaking to the downside. Fred, thank you. Right. I mean, it's very right. it's not that far, right? Any good news in the market, we can get to 330 very quickly. Fred, thank you. All right, guys, that's all I have for today. Thank you very much. Johnson & Johnson, I mean, money has to go somewhere, right? And one place money can go right now, precious metals, right? And healthcare, UNH. But I would trim, right? A lot of overhead resistance. It may or may not break that level. So I would trim your position. Personally, I'd close half of my position, and maybe the other half I'll, maybe I'll add if it drops here, or maybe I'll let it ride, into the earnings here. All right, that's all I have for today. You guys have been great. Thank you very much, and have a great day. Scott will do the closing bell. If you find the information useful, do me a huge favor. Please click on subscribe. And any videos that you do find useful, please share it on social media. That will help us grow our marketing effort, reach more people, help more people, and everybody wins. Thank you very much, and have a great day. Phil, Bob, Fred, thank you. John, Ted, Larissa, Aviva, Bob, Dan, Ed, Fred, Irene, Cool, Michael, Peter, Phil, Raymond, Richard, Ted, Momsidar, Victor, Bill, and everybody else. Thank you very much, and I will see you tomorrow morning.